Alright, so what's going on with the court twist in SBB? Hey, I'm Andreas, I've been investing for over 10 years. In today's video, let's cover the court twist, the news, and let's go over the difference between the B and the D shares. That's everything asked by the community, so I hope you enjoy this one. Alright, the first part, this will be relevant for anybody watching from any country, because all shares are not created equal. There's a huge difference. For example, Mark Zuckerberg continues to control Facebook, Meta, because of his shares has higher voting rights than normal shares. And you can create financial instruments like this, make them do slightly different things. In the Sweden, we have A shares, they're called. They give higher voting right. And different countries do this in different ways. As I just gave an example of, the Zuck has his own way to retain control of Meta. Then we have B shares in this case, which can be called the normal share. And then we have D share for SBB, which is just a normal share but with higher dividend yield. So we can see here that the normal shares here, A and B, get 1.44 Swedish kroner per share in dividend, and then the D share gets 2. But shouldn't you just buy D shares then? Isn't that better? Well, if the company performs extremely well and get a lot of capital gains increases, then the D shares will not benefit as much as this. So this is basically a light version of the preference shares that some of you might be familiar with. It's like an equity bond of sorts. It's higher claim to the assets than normal shareholders. So in case of a bankruptcy, they will be paid before normal shareholders, which are paid last. So that's a risk to be aware of. But they will have this higher yield. And then after this, we have debt holder of, for example, obligations. And this segues perfectly into the next part of this video regarding the news of the twist here that SBB is having. So we can see that allegedly, alright, this is the investor relations page, by the way. This is how I do the research. I go into the company's own website and I look at press releases. I think that's a lot more accurate than just reading a news article of, for example, Yahoo Finance or something like this. You see me do it and give commentary on it, but that's just because I tend to disagree with the news pundits on a lot of cases. In this case, for SBB, we're seeing that the debt holders here, they're owning obligations. It's a debt instrument. They claim that SBB has made a breach in the agreement, and the breach in this case is regarding interest coverage ratio. So there's a lot of legality around these debts. They have the maturity date, of course, we see them, they have the yield, but then they also put clauses to protect the creditors, the ones giving the loans in this case. And in this case, there seems to have been a clause that, alright, they have to have cash on hand or cash equivalents to be able to cover the interest rate on this loan, let's say 3-4 times, something like this. It didn't say the exact number in the press release, so we're not aware of this, but they need to be able to cover the interest rates several times over. And allegedly here, the creditors of these obligations, they claim that SBB has breached this, and they send a request for earlier payment. So this will be fought out in court. So nominal value here of about 52 million euros on both obligation series. So this is a serious matter. It's going to be resolved in court. It's a way to put pressure, of course, and it's a way for the creditors to protect their own interests if they are scared about the ability to repay, and if they feel like they've been wronged in some way, then of course they're going to try to protect their interests. And why wouldn't they? We've seen some very strange things going on in the debt market. For example, Credit Suisse, when they made a lot of bad things and they had to be absorbed by UBS. Well, then equity holders were paid in full and debt holders were not repaid in full, just a fraction. So equity had seniority over debt in that case, and that's unprecedented. That's like a breach of natural laws in finance, basically. So I can understand that creditors are more on edge right now in this market, and when they're seeing, SBB pay out a dividend here as they did earlier, perhaps not retaining cash as much as they would like, well, then they're gonna get scared. In my opinion, and in my speculation, I think that they're gonna try to put pressure on SBB to try to broker some sort of deal, perhaps make sure that they can't pay out any dividend, something like this, just to protect their own interests, because we're in a very unstable, volatile, uncertain period for property companies right now. We don't know where the interest rate is gonna go. We don't know how refinancing of old debt that was financed at a very low rate and now it's going to be refinanced at the current market environment in a higher rate. How will that affect property companies? How will that affect older debt? I would be scared as a creditor too. So I think it's a way for them to put pressure, and I think they're going to try to settle this and just put some more restrictions on SBB, just like we saw in the court case with MPW, where they will put a clause on them that they could not pay more than 8 cents every quarter in dividend until the Disord situation was fully resolved. So we've seen similar situations before in the market, and I think that the creditors have seen similar situations. They are way more aware of what's going on in the market than you and me, and I think they're taking advantage and pushing for their own rights, pushing for their own benefits, as they're entitled to do. I hope you enjoyed this video covering the difference between the B and D shares and the ongoing twist. That's been it for this video, and as always, hope you guys make a ton of money whatever investments you decide to make. Take care now. Bye bye.